Have you ever wondered until when Tesla stock will be available and affordable to most retail investors? Although the leading EV company is constantly plagued by issues left and right by critics and longtime Tesla bears, experts believe Tesla stock will continue soaring to unbelievable heights. You definitely would not want to miss this one. A lot of investors see massive potential in Tesla, especially because the company was the first to introduce electric vehicles in the market. ARK Invest believes Tesla will continue to lead the electric vehicle market, especially if Tesla is the first to be successful in autonomous driving in the United States. She said, "We're beginning to believe that not only will Tesla take the biggest share of the electric vehicle market, we also believe that it could take 20 to 25% share of the total auto market in 5 years. That's by 2026. ARK Investment Management LLC, or simply ARK Invest, is an American investment management firm founded by Cathie that manages several actively managed exchange-traded funds. ARK Invest focuses solely on disruptive innovation and offers investment solutions to investors seeking long-term growth in the public markets. Wood is the founder, CEO, and CIO of ARK Invest, a company with $60 billion in assets that invest in innovations like self-driving cars and genomics. Wood is often called the most underrated investor and is known as a star investor. In ARK's 2021 open-source Tesla model, the firm outlined its expected value of $3,000 per share in 2025. In fact, Tesla Inc. CEO Elon Musk, through his employees, said that he agreed with Cathie when she stated that Tesla is worth $3,000 per share if they perform well. Musk explained that if the company executes well and indeed will have a price tag of $3,000 per share, it will make Tesla's valuation at around $3 trillion, making it the world's most valuable company. As of today, Tesla is hailed as the world's most valuable automotive company with over $700 billion worth. However, Cathie and ARK Invest have since updated this stance due to material changes, including autonomous ride-hail assumptions and inputs and capital efficiency estimates, and the forecast has been pushed forward by 1 year to 2026. The updated model by ARK Invest shows updated assumptions for the total market for autonomous ride-hail at each price point and the probability that Tesla will solve for fully autonomous driving. Based on their analysis of consumers' perceived value of time, they expect more demand for autonomous ride-hails at higher price points than originally modeled. According to the updated model, ARK has a set price target of $4,600 for Tesla by 2026 and concluded that there is a 25% probability that Tesla shares will be worth $2,900 in 2026 in a bearish scenario and $5,800 in a bullish scenario. If this happens, Tesla stock will be impossible to buy for any average American and will be made available only for those who are already at the top. Tesla's capital expenditure per incremental unit of capacity has improved, falling from $84,000 to $7,700. Previously, ARK expected that Tesla would spend $6,000 to $8,000 per incremental unit of capacity in 2025, but now the firm expects that it will spend only $2,000 to $7,000 per incremental unit of capacity in 2026. Go to Moomoo to see exactly how Tesla stock will perform. Link in bio. According to ARK Invest, Tesla's prospective robotaxi business line is a key driver contributing 60% of expected value and more than half of expected EBITDA, or earnings before interest, taxes, depreciation, and amortization in 2026. Across the simulation set, they expect electric vehicles to constitute 57% of the company's revenue in 2026, although at substantially lower margins than the robotaxi revenue. Because of ARK's increased conviction in Tesla's ability to achieve full self-driving, they have to be updated with how the robotaxi business feeds into the model. Although in the past, they predicted that Tesla will never be able to launch autonomous ride-hailing, recent positive innovations from Tesla made them change their mind and assume its launch in 2026, 4 years later than Musk expected. They also suggest that Tesla will commercialize autonomous ride-hail in 2024. However, in 9% of their model cases, Tesla does not commercialize robotaxis within the 5-year window. If and only if robotaxi commercializes within the forecast window, the modeled financial results for Tesla are susceptible to the year of launch. By 2026, if Tesla successfully launches robotaxis, the expected value is the average of all 1 million simulations. Said simulations are highly sensitive to the year when Tesla finally launched robotaxis. In most of ARK's lowest price per share scenarios, Tesla launches a vertically integrated, human-driven ride-hail service but does not launch a robotaxi network, while in other scenarios, Tesla does not launch either service. While the company has not committed publicly to launching human-driven ride-hail, ARK detailed previously the strategic and tactical advantages of doing so. Importantly, human-driven ride-hail could become a profitable recurring revenue stream before Tesla launches a fully autonomous service. For cases in which Tesla launches a human-driven ride-hail service and solves for fully autonomous driving, ARK assumes that its human-driven ride-hail cars will transition to the autonomous ride-hail network over time. If it is unable to launch a robotaxi service within 5 years, Tesla could launch a human-driven ride-hail vehicle while trying to solve for full autonomy. On the other hand, in ARK's many higher price per share scenarios, Tesla launches a robotaxi network in the next 2 to 3 years. In a published article, ARK Invest stated that, although tuned to our expectation for 2026, we believe our Tesla model is methodologically conservative. We assume that Tesla stock will trade like a mature company rather than a high-growth one in 2026. Although Tesla stock reached an all-time high of $414.50 several months ago, the amount adjusted for its recent 3-for-1 stock split, it has since declined by more than half and touched a new 52-week low of $204.16 in the past week amid a slowing economy. Still, Tesla holds plenty of promise as a business, especially over the long term. Tesla's valuation is often the source of fierce debate on Wall Street. The company is worth about $680 billion, which means it's 14 times the size of Ford Motor Company, for example. Tesla has a discernible first mover's advantage in the electric vehicle space. With an annual production capacity of 2 million units already, a level Ford doesn't expect to reach until 2026. The company's innovative manufacturing process is also the envy of its largest competitors, including Volkswagen Corp, which says Tesla is the benchmark in that department. A more efficient production process means lower costs and more profit, and Tesla currently maintains the highest automotive gross profit margin of any other car maker. It came in at 27.9% in the recent third quarter of 2022. Moreover, Tesla is also a leader in self-driving software technology, and by some estimates, that market could be worth over $2.1 trillion by 2030. With the company's full autonomous robotaxi slated for release in 2024, it will potentially reclaim the pole position on that opportunity. This is a technology that other car manufacturers could take far longer to crack because it requires years' worth of real-world data. Then, there are Tesla's other businesses like residential solar power generation and storage, the demand for which is so high that the company is struggling to keep up. And at this year's Tesla's AI Day, the company revealed a new humanoid robot called Optimus that could change the workforce forever. Despite all its issues and roadblocks, 2022 has been a big year for Tesla. It opened 2 brand new gigafactories in Texas and Germany that doubled its previous annual production capacity of 1.05 million electric vehicles to 2 million. In fact, Tesla CEO Elon Musk outlined ambitions to produce 20 million cars annually by 2030 from as many as 12 additional gigafactories. There's also the robotaxi business, which may well possibly change mobility forever. The expectation is that Tesla's model won't require any human intervention whatsoever, so it could revolutionize the way we move around and upend the logistics business. Wall Street analysts are predicting Tesla will generate about $120 billion in sales through 2023, and experts believe that the EV company will likely be producing vehicles at a run rate of 2 million per year. So if that production figure rises tenfold, Tesla's annual revenue could exceed $1 trillion by 2030, assuming vehicle prices remain constant with today's levels. If this happens, Tesla stock will inevitably soar high enough that most retail investors will no longer be able to afford to buy a share of the leading EV company. While Tesla stock is down 41% year-to-date, focusing on what might happen in the next few months or even the next year is short-sighted given the sheer number of opportunities this company could unlock over the next decade. That's why, irrespective of the economic environment and shaky stock market right now, experts believe that investors should consider taking advantage of the dip in Tesla stock. Subscribe to this channel for more Tesla stock content.